Mortgage rates are the lowest they've been in over a year, and refinance mortgages are at a 2-year surge. So you guys know how it is. Sometimes with lenders, you fill out one application, you're going to get 5-10 lenders calling you. And in this video, I'm going to give you everything you need to know on how to decipher which lender is best for you. And of course, you know, your girl is ready to lend in 49 states. So I hope you call me. I would say always ask your lender your mortgage rate, but not really, because it's not just as simple as, hey, do I have a 5% or a 6%? Because now we're getting into the APR, okay? No one really talks about APR. We always talk about rate because you can have an amazing mortgage rate, interest rate. However, if your APR is trash, okay, APR is mortgage rate plus fees. So if you have, you're like, but April, this other lender saying they can give me a 5% rate. Okay, what's the APR? And actually, not just what's the APR. What are your fees? Let's just like bring this down. Let's just talk in plain English. 5% rate at what cost? Is there an origination fee? Is there a warehouse fee? Are there discount points? Is there an application fee? Is there a loan processing fee? Is there an underwriting fee? Is there a wire fee? You guys, listen, at Cornerstone First Mortgage, powered by Cornerstone First Mortgage, we have underwriting and processing. Discount fees, we can get into that. But I am telling you, you guys, it is, especially for big banks, it is so normal for them to have origination fee, warehouse fee, funding fee, processing fee, application fee, underwriting fee, and discount fee. So, yes, ask your lender what's your mortgage rate, but also ask at what cost. Especially when you are, don't shop me, okay? I would like to advise you to, you can't compare lenders, but make a decision on who you want to work with, okay? But when you are comparing lenders, you want to ask them, what is your mortgage rate and at what cost? When you lock my interest rate, how much is that going to be? My next point is, you know what? I'm not even going to say this for later because it gets me in a tizzy when people say, are you going to do a hard credit pull? I swear, Dad, I love you, but even my dad asked me that. And I said, so sir, if I said you had to, are you not going to do the loan? I say that to my own parents respectfully. So to everyone out there, like, what do you guys, this hard credit pull thing, this myth, this urban myth, if you don't do a hard credit pull, that means the bank can't do what they need to do for their process, which means you are not going to get a loan. So what I advise you is let it go. Now, I've done videos about this where if you are someone with terrible credit, okay, and you're shopping for more credit, that's when the inquiries brings your credit score. It's like ding, ding, ding. It's like, what is this person doing shopping for credit? They don't even manage what they have, okay? But if you are someone with good or excellent credit, America's built on credit. You are not going to get penalized for getting this hard credit pull. You're not going to go from a 740 to a 680 all because you're shopping for a mortgage. That's not how it works. And this is quoted on Equifax.com. What type of mortgage is good for you? Now, I want to actually preface this by stop calling your lender saying you need a HELOC or you need a home equity loan or you need FHA, because let me tell you that, no disrespect to other lenders, but if you call the wrong one and you say, hey, I need a FHA, and you may qualify for something better. Same with HELOCs and home equity loans. I know I definitely preach a lot about, listen, if you currently have a low mortgage rate and you want to access your equity, pull cash out, I always say protect that first rate and then just get a second lien. However, if you want to pull cash out of an amount that's significantly larger than your current principal balance, it does not make sense for you to do a HELOC or a home equity loan. Why? Because second liens carry more risk. When loans carry more risk, they cost more. So, for example, not to trying to stay on track with my 10 items, but let's say, for example, you have a $50,000 principal balance right now at a 3% rate, but you want to take out $300,000 in equity. Okay. You're like, but April, you said on your video to protect that first lien and to just start a second and to just do a second mortgage. Yeah and no, because to do that second mortgage is going to cost you prime rate plus 1 or 2%. Right now, prime rate is 7.5%. So let's say it may cost you 8.5, okay, mortgage rate. 8.5% mortgage rate on $300,000 plus your current loan of $50,000 at 3%. That's scenario one. Or wrap them together and create an entirely new loan and do a cash out refinance in the first position, which means there's less risk and which means a better price for you. That means take the $50,000 that you already have plus the $300,000 you want, combine them together. Now you have a $350,000 first lien at, let's say, 5.75. 350 at 5.75 or 300 at 8.5. That scenario alone, even before I whip out an amortization schedule, that scenario, you're like, oh, that is what I'm saying. Like, be careful when you pick up the phone and call a lender. Just tell them your problem, tell them what you need, and let them problem solve and put together a couple solutions for you. Another question that I feel we don't talk about enough is mortgage insurance. Ask your lender, what's the cost of this mortgage insurance? Because it differs when you're doing FHA, conventional, VA, and, for example, FHA carries an upfront mortgage insurance premium. So not only are you paying for the loan itself, but now you're adding 1.75% to that loan. Or, which is fine if that's the only loan you can do. Okay, this is not a let's hate on FHA video. But that is prime example of how it differs from FHA to conventional. Conventional loans, you can pay all your mortgage insurance up front, as in a single payment, versus paying, X amount until you reach 20% equity. You can negotiate to have your lender pay for your mortgage insurance. So you just want to have that transparency with your lender on how much of my monthly payment is my mortgage insurance. Is it $50? Is it $250? Is it $400? Like, what is it? You 1000% need to know what is a mortgage payment that I would love to have and what is the highest that I will go. And then, of course, reverse engineer that to then have that be your purchase price in this area with these property taxes plus this homeowner's insurance. That is the highest you can go based on the mortgage payment that you want. So when you get pre-approved, of course, I just don't see a lender not having this conversation with you. I just don't. Especially with these new construction videos that I see about the property taxes are nowhere near what I thought they were going to be. Yes, property taxes today on that new build may be $1,000 for the year. However, in that town, in that area, property taxes are typically $9,500. So, sir, do not give me a loan estimate or close out this loan with property taxes at just $1,000. And that includes even if there's a tax abatement. The tax abatement only lasts for so many years. So, no, I need you to tell me worst case scenario, my property taxes, because that definitely affects your monthly mortgage payment. So the last thing, which I think is the most important, is you have to feel like you can trust your lender. Because there are 3 things that are the most private to us: our money, our health, and legal stuff. And so anytime you're in any one of those 3 things, your doctor, your attorney, your banker, and the only other people who know about your money is your significant other and me. So you have to partner with someone who you can have a real conversation of what happened, what's about to happen, your current state, and to just be honest and to talk about the stupid questions. Okay? The people who do not have a good relationship with their lender, some of you have called me like, oh, well, can you, like ask me questions. I'm like, wait a minute. Do you have a lender? Well, yeah. So, okay. So what are we doing? So I said, okay, step number 1 is you don't trust your lender. That's a problem, because these stupid questions, if you're not able to ask these stupid questions, that's how you end up with the wrong loan product, the wrong mortgage payment, the wrong house. And that's how people have home buyer's remorse. Okay. So hope you guys enjoyed this video. You know, like I said, I'm going to do my best. I'm committed to sharing a lot more information with you guys. Thank you for supporting my channel, and make sure you share this video with a friend. And until next time, I'll see you guys in the next video.